Hey everybody, welcome to Stock Trading Pro. In today's video, we're going to talk about that big, beautiful green candle that we had in the S&P 500 on Friday and why I don't trust it. We're going to break down all of the internal scans that I run, specifically breakout scans, sector by sector, stock by stock. And I'm going to show you why I am not buying aggressively into this breakout that everybody is all excited about heading into the new week. There's certain metrics that we run, some kind of custom metrics that a lot of times there's secondary indicators, but when they're diverging from what the bigger picture in the market is doing, we kind of have to sit up and say the stock market is not lining up perfectly right now. And that big, beautiful explosions that we saw in a lot of big stocks, also, we're going to review the S&P 500, has me kind of wearing my seatbelt heading into Monday, especially with some of the economic data that we have coming out tomorrow Wednesday and Thursday is actually going to be big data. So we have a ton of stuff to talk about. I'm actually going to take you behind the scenes into some of my private scans and exactly why I am not as enthusiastic as everybody. If you remember last week, we kind of talked about something called a bullish echo. And that essentially is when the market, the stock market or individual stocks just kind of explode. And you want to get in there, you want to buy them, but they're not setting up good risk reward, despite the fact that they're obvious. And I want to show you probably one of the best examples of that right now, which is AMD. AMD just exploded to the upside coming out of earnings, and it was just amazing. But as we kept kind of crawling higher and higher and higher and higher, it was just hard to justify new risk in that trade. So don't ever forget that the only reason we choose to buy stocks, whatever stocks we decide are the best stocks to buy now, we still need to justify the risk that we're accepting on the idea because we believe that the next profit target is likely. A lot of people kind of throw out the risk reward ratio thing and they're like, yeah, risk reward 3-to-1, it's beautiful. But what a lot of people do not take into consideration is the likelihood of that 3 being hit in exchange for the 1 that you need to risk. And I'm going to break down today what that looks like in my daily ticker, my private behind the scenes kind of stuff. And I also have a very big announcement that I want to share with everybody today. We have a really special event going on Wednesday, Thursday, and Friday of this week. For members that maybe are not in our community already, want to kind of get a personal coaching from me, a little bit of interaction from me, a little bit more lessons from me, I guess, and a little bit more longer session. We're going to be doing 90-minute sessions this week, and you're going to be invited to that. So stick around. Be back in just 1 second. Okay, first thing I want to do while I have everybody's attention, I just want to really let everybody know how excited I am about this event that's coming up this week. It's something I've never done before in the last ever, really 3 days of live training for people that are not necessarily from a stock trading perspective. And then John is going to give us his perspective in his options newsletter. And they're actually kind of opposite right now. So there's many different ways of making money with options because whether it moves or not, there's always some kind of an opportunity. The way that John's looking at it right now is he's looking at the breakout and sees it across the board. I'm kind of looking at it a little bit differently. And it's kind of fun to kind of go back and forth. And that's something you want to write down. Again, when you have your notepad out, and like good traders do, you have this out and you're taking notes all day, every day, you want to write certain things down. And building an argument is probably the number one thing. And I'm going to walk you through what that looks like in the daily ticker right now. But I want to start out first with the S&P 500, right? We're going to talk about this big, amazing, beautiful breakout that we had on Friday. Especially coming off of when Jerome Powell actually came out and made those statements on Thursday. The market didn't like it. We kind of got crushed. We also had the bond auction that was kind of like, not really good, right? So everybody's coming in. Now, this is the big thing I want to get across to everybody. And I don't know if Mike Brattenberg is on the call right now, but we had a conversation on Friday morning in reference to the market taking a big dive on Thursday and people saying that they were surprised or didn't expect the market to find buyers on Friday. Now, here's the big thing. And this is another writer downer. These are the kind of things that need to be like a part of your thought process, is that when the market is strong, like it is, and like it has been for the last few weeks, you have to assume it's going to continue. So until you see a valid reversal of the order flow, and I'm going to get into that in just 1 second, until you see a validated reversal, you have to assume that the existing order flow is still in place. Now, depending on how long you hold trades, that's going to matter as well, because you could be day trading, you could be swing trading, you could be holding ideas between earnings reports, and that will change things, right? So you won't know if it changed unless you are 100% clear which trend you're trading. Now, that's a lot, right? But if we kind of work our way through this, and if we're looking at just the intraday charts for day traders, you can clearly see that Friday we rolled over, but that's in the bigger picture of this. So this buying pressure has not changed yet. One day of news, one bond auction is not going to reverse all of this. However, what I want to walk you through now are the deeper thought processes of how I put together the daily ticker this morning. So I'm going to walk you step by step with the way I game plan for everybody during the day. So we're going to work our way over into today's daily ticker. And again, this is a part of our memberships. If you're in our memberships, you get access to this every day. So I want to walk you through how I'm thinking and how I'm seeing and how we kind of build that argument and how that plays into what the market is doing right now. So if I could just kind of come back on the screen one time really quickly here. Your job as a money manager, and yes, if you're managing your money, you are a money manager. Your job is to build arguments. Your job is to say, what's happening right now? How do I know if it reversed? And what do I plan to do if it continues? Like, that's the foundational part of a trade. Strip out all the fancy indicators and all the other stuff that's going on. What's going on right now? How do I know if it's still happening? How do I know if it changed? Once those pieces are into the puzzle, then you have to kind of stack more reasons on there for choosing to accept risk, which means when you buy that thing, you're expecting a profit. How likely is that profit? That's what we're talking about right now. So if we kind of work our way through here, so trust the breakout or the metrics. I'm going to break that down. So the breakout we're talking about is this move here. Okay, this big move here. Now, if we kind of draw this in and go to a little bit more old school chart reading, we're kind of like right there. Boom, 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 boom. The last 3 times it hit this trend line, including Friday, this is where things reversed. Okay, so as of right now, it's going up. As of right now, we're at resistance. Now we're going to kind of add a little bit more flavor to that, right? So let's work our way through how the S&P 500 over the last 5 days can influence what we plan to do today, Monday, heading into the week, and then specifically what area might have the strongest probability of stocks following through in that direction. Okay, so let's walk through the research heading into today. All right, typically the metrics are secondary indicators to validate what we already see on the charts. That's very, very important. Okay, things such as the advanced decline line numbers, new highs versus new lows and such. So if we kind of work our way over here, these are the metrics that we run. You can see that I run them for the community pretty much every day. And then when the day finishes, that forms into what we have are pretty much the dominant metrics, right? Everybody knows advanced decline line. Has that been obvious? Not really. 2 weeks ago it was. What about the high-low difference? Still pretty skewed towards bearish. And for months, let's keep that in mind, right? Then we also have this one, which is one of our primary custom metrics, which is measuring 20-day highs versus 20-day lows. Needs to meet certain volume criteria, needs to meet certain volatility criteria. So that's not every stock that made a breakout or a breakdown. It needs to meet criteria. And let's think about this. If you think about, hey, Sal, how's it going? Let's take Sal, for example. Let's say Sal is watching stocks. Sal would want to know the stocks that are at least trading their average volume or even more. Those stocks that are at least doing their average, those are the ones that we kind of put into the metrics. So let's say that you have 10 stocks. But let's say 4 of them hardly traded at all, didn't really do anything normal for what they do. I'm not really including those. I want to know if a stock breaks out or breaks down, did it happen on significant volume? So that's kind of how we tie that in. And we take a look at this metric. And you can see that's also been bearish for most of this period. We had a couple of days last week, but you can still see the breakouts are not as dominant yet as you saw over here, which was kind of the end of August when we had that big push at the end of the month, right? You can actually see that over here, right? Now we're going to go a little bit deeper. So we're kind of saying, oh, cool, right? Market's breaking out. It's not really best that we hit that trend line, let's try and go in a little bit deeper. So we just saw in the breakouts, not exactly screaming to the upside like you would expect here, right? But we're going to go a step further. And this is really where it starts to get super, super interesting. We started running these metrics, which are every single stock in every single sector that trades at least 500,000 shares per day and trades at least 50 cents average true range per day. And this is roughly 1,300 stocks that meet this criteria. Now, this is really where things start to get interesting and why I put that big comment up there today about, are we looking at a fake out breakout today? What would you be thinking looking at this on the market right now and saying, okay, breakout, let's go get them. Let's step on the gas. Everything looks great. Well, you'd want to go and see to make sure that a lot of stocks were also doing the same thing. So now this is where it gets a little bit different. This metric over here is 20-day high and low breakout. Now you can say, maybe I understand why 20-day breakouts are not dominating yet, right? But what about 5 days? What about the gains over the last 5 days? They should be pretty good, right? You should see the majority of stocks dominant on the bullish side, the way that markets have been. But let's kind of work our way down and take a look at what the market looked like on Friday. Almost all sectors were negative other than technology, and technology has been decreasing pretty much over that same 5-day period. So what does that tell us? What does that tell us so that we can make our trading formulaic, step by step, easy to understand what we're looking at? The breakout, that's good news, right? A lot of stocks broke out. We saw a lot of individual stocks just explode, have these giant green candles, and that's amazing. The challenge that we're having, and we wrote about this last week in the daily ticker as well, is that the dominant indices are dominated by that small handful of stocks. You call them the Magnificent Seven, whatever you want to call them. But let's take a look at the S&P 500 again and start to see if there's something different that we could notice. So this is the last 5 days. We have that big breakout. I'm going to put them up on the screen just to give everybody like a really quick version. You can see how the S&P 500 and the Qs and everything broke out in a big way. And then you kind of break it down a little bit more over the last 5 days. Can you look at this right now and say, wow, everything is going up? No, we can't say that. So what does that mean? That's the most important question that we want to answer, not only going into this week, but also more importantly, day by day, kind of building this argument. And what I want to do now, and again, if you didn't happen to see it, I'm going to show you now, but then we're going to get into a lot more detail on this. We're going to work our way through the S&P 500, and specifically heading into this week, we need to start to create a roadmap for where do we believe the buying pressure is right now and what's the most specific stocks that we should be looking at. So it should be fairly obvious that the majority of the market did not go up last week, and it's concentrated in one little pocket of opportunity, which is technology. So now we're starting to get a little bit more specific on which ideas make the most sense heading into the week. Okay, so let's continue to break that down, and we're going to work our way through the daily ticker, right? So I decided to create my own metrics. That's what I just showed you, right? Each night we run custom metrics for all sectors. We start with breakouts, and we look at the normal ones. The new metric, which is what I just showed you, told us when to hold the winners longer. So I want to kind of bring that back into a little bit of a different way. When we're looking at that new metric and we're starting to see pockets of opportunity in individual groups, it tells us that there's more going on. And then we kind of bring that over here. We can start to see, look at what's going on over the last few weeks. Does that look like it's a screaming move to the upside? Not really. But let's go back to when it was. We're going all the way back into the finish of July. So what we're seeing now is we're allowing secondary metrics to tell us when to hold good trades longer. So I want you to raise your hand right now. Raise your hand if you've had a really good idea, book that profit as soon as it moved in your favor, only to watch that thing continue to go without you. That's because you need a process and a little bit of secondary metrics like I'm showing you right now to say, hold on, nothing has changed other than your desire to book that quick profit. And this is what separates traders who have these really, really big, amazing growth to their account from other people who are like kind of going back and forth like a yo-yo where you make some money, you give it back, you make some money, you give it back. It's learning how and when to hold the winning trades longer that will separate you from that cycle of breaking even. So that's another thing you want to write down. How do I know when to hold the good trades longer? So if we kind of take a look at these metrics, this is the kind of stuff that tells you what's on the table. It's broad-based, and those are the situations where there's a little bit more in the P&L, right? So let's continue with the daily ticker. I want to make sure that everybody understands how we're kind of walking things through, right? When the majority of stocks break out over that 20-day window, it's powerful, again, giving you clues to understand when to hold longer, all right? When metrics are mixed, it tells us to switch to quicker profits because the big dogs aren't doing something special. Let that sink in for a second. What we just outlined for you is recognizing and spotting opportunity when the institutional activity, the people that move stocks up and down, when they're doing something special, which is all of those metrics on the same page and trending in that direction, or when they're mixed, when it looks like a Christmas tree, it's back and forth. This is the part you want to listen to. When it's mixed and not perfect, that's when we have to shift into a different kind of profit-taking strategy, where in that situation, it is the smarter play to book profits quicker, or at the very least move up a trailing stop and keep trailing it up, knowing it's not perfect. The only way I could really give you this illustration, which is one that I've probably been using for 20 years now, which is driving. When you could recognize when to step on the gas and it's okay to stay in there a little bit longer with that aggressive style of driving, that's when you level up your driving, right? When you drive long enough and you can see two cars in front of you have their brake on and you're kind of going back and forth, that's more experience. And now the only way you can get there is by actually driving, right? You're not going to learn how to drive by watching Grand Theft Auto. It's not going to happen. You actually have to get behind the wheel. Trading is very similar. And this is the kind of arguments, the kind of things that I want to walk you through both here. And obviously, I hope that you attend that 3-day session with me this week, is understanding how to look, set your charts up properly, set your watch list up properly, and set your metrics up properly to tell you in that moment, right now, here's what that means. This is where trading becomes infinitely easier, less stressful, and simpler to make decisions. And quite honestly, once you master that, it can actually become faster to get profitable, not because you're predicting, but because you know what you're looking for. And then you could make a decision of whether or not it's there. Think about how different that is to what you might be doing now, where you're trying to predict. You're worried about where it's going to be some point in the future. When we don't have that information, we only have the information right now. And it's our job to put pieces into that argument. Is it one reason you want to buy that stock, or is it 5? Think about the difference in your conviction level of 1 reason versus 5. And that's kind of the stuff that I really want to walk you through and understand how to do that. So we're going to actually continue here a little bit more, right? So when the metrics are mixed, it tells us to switch to quicker profits, as we just outlined. And that takes us to today after last Friday's massive breakout, right? Looks great. Everyone cheered for it all weekend. But I began my weekend and my research. I saw something different, something quite frankly wrong, all right? About 2 months ago, I created this new metric that tracks percentage gains for each stock in each sector over the last 5 days and the differential. What I want to know is the most recent buying or selling pressure in sync with the market. And that's another big lesson that I want to teach you right now. One of the first things that you should be doing when you look to come into the day, come into the week, it doesn't matter if you're day trading or swing trading, it applies to everything. Your very first question is, what is the market doing? If the market is obvious, you have all of that buying pressure behind you. And that's another level of conviction. But too many people make the mistake where they just go straight to the stock and they have no idea what's going on in the market. You are lowering your conviction level. Again, raise your hand if you've ever hesitated or doubted whether or not the next trade was going to move in your favor. That's just because at this moment, you don't have everything set up properly yet. You don't have everything set up to tell you right now, here's my conviction level and why. It's not hard. The hard part is before the market opens, when you spend the Saturday afternoon, you pour a cup of coffee and you make sure that this is all set up so that you just, boom, you just look at it, you're like, okay, I know what I'm looking for and I know what that means. That's where trading becomes fun. Yes, I said it. Trading can be fun when you are set up properly and when you're using what you have on your charts. Actually, last week's coaching call, we got a little bit loud with a couple of people in our community because they had this stuff set up, but they're not using it. Having it and using it, not the same thing. All right. Let's continue with the research. All right. So only one sector was positive, as we just outlined for you. You can see all of those right now in technology, and you can actually see the number has gone down, right? So I run the scan. There's roughly 1,300 stocks that give me sector-specific results, a massive breakout in the indices, but most stocks across the major sectors finished negative for the week. Spidey sense going off on buying that breakout. Now, here's really the money shot of it, right? This does not mean to sell short, and it does not mean to just, boom, get out of the ideas. This is a very big misconception that people have, is if I sell my long, that means that I should now trade in the other direction. For those of you that are advanced and understand short selling, that is not what this means. What this means is we are going to start moving up our trailing stop loss because what we looked for did not happen. So in other words, the breakout happened, but we're kind of looking at all the gauges on our dashboard and like, wait a minute, why is that going all the way up like that? That's not what I want to see. It's getting hot. That's kind of what we're looking at. We're still going in that direction. You'd be moving up trailing stop losses on existing winning trades and any new positions that I'm looking to put on. Because I'm not seeing perfect, I am lowering my initial position size. So I want to be clear. We need to be aware of what just happened. We need to be aware of the fact that it's still obvious, but something's not perfect. So if it's not perfect, you kind of just a little bit more cautious with how much you're stepping on the gas. That's all that means. Now, if we get a big reversal, it's not going to shock us. We're going to be prepared for it. If we kind of still drift higher, we're also going to be prepared for that with position size, because the risk reward, it's just not perfect right now. It's hard when a stock makes new highs 8 days in a row to be like, man, this is definitely going to keep going. That's not what normally happens. Remember, we have to trade what is probably going to happen and know what we definitely plan to do. Very important. If you might want to write that one down again. So let's keep going through, and I want to walk you through the ideas that I'm looking at heading into today. Okay, so the 5-day chart of the S&P tells kind of the same story. The process we just outlined, which is the market, the metrics, and looking at price action, is what I call building an argument. Essentially piling up the reasons to choose to accept risk. So tech has my focus for Monday. I'll be long, but wearing my seatbelt. So wearing my seatbelt means instead of going in full on my initial position, I'm going to lower my initial position size because most of what we're looking at is not perfect. Okay. Now that's heading into Monday. All right. So the new optimal entries in the technology sector actually started on Friday. Microsoft is a good example with a 2-day pause and a breakout. So when we're talking about the optimal entry, we're talking about a push and a pause. That pause is what resets new risk looking for the next push. So you can see here we had a 2-day pause in Microsoft before it took off. So technically, in a lot of these tech stocks, Friday was the optimal entry. We're a little bit late, still obvious, but a little bit late on the new entry. All right. 1 day after the best entry is okay, but you need to determine the right risk. Again, risk profit management, right? On the size of the candle. AMD is another example. Nearly a $6 candle on Friday. So again, you see how I'm building the argument, which stocks make the most sense heading into the day. For a new swing trade, that means $18 off of that $6 candle for an acceptable 3-to-1 reward to risk. From Friday's high, that doesn't even include the fact that it already went up $6. Now, if you know and have been a member of the community, you understand we talk about average true move, and that's what does the stock normally do when it rallies? And where are we? If I'm about to buy that stock, how much did it already do compared to what it normally does? Kind of simple, right? If it normally goes 10, how much has it already moved? Okay. A quick review, the average move for AMD, and that's on the high end. This $18 move is on the high end of what the stock normally does. So it's an extreme. When you put the extreme in with what it already does, I'm not going to look to put as much into the trade as an initial position. We're probably going to pause a little bit. Now we're going to kind of work our way over towards some ideas that do make sense at this particular moment. D-Dog has my attention for Monday as the stock continues to hold the earnings gap, paused for 2 days, and Friday, again, had a pretty good rally. So that's at the top of my list. Uber on a breakout looks solid as well. If you didn't happen to see Uber, pretty clean breakout on Friday, took out some pretty big levels. Not bad, right? Looking for follow through on that one today. Kind of neutral so far today. Working our way through, SQ needs to hold that earnings gap. That's another one very similar to D-Dog. Micron closed as an inside candle. This is a big one at Micron. Once, twice, three times, four times it tested the 72 level. Finally punched through, finally paused, threw in another bullish gap, and then paused again on Friday. Now, you could say Micron had relative weakness because it didn't explode with a lot of the other technology stocks, but it paused after a big breakout. So I'm looking at Micron for follow through today. 72, four times, finally got through, broke through, held above that level, another bullish gap, another pause. So Micron's something I'm looking at today, right? After pausing for a few days, GoDaddy and CRM. Look at this GoDaddy resistance level. If we kind of zoom out a little bit more on GoDaddy and take a look at what it's doing, you can see it had this monster move. It's now paused for 4 days, and it's sitting right at this big level. So let's put this into the context now. What are the likelihood of following through here? Well, we like the pause that kind of reset the optimal entry. That's giving us good risk on this idea. But this 88 level looks like a monster wall of resistance where sellers just kind of kept shoving it back down. So this would be one where I'd be a little bit more conservative on my entry. I want you to say, GoDaddy, prove to me you can stay above that level as opposed to just trading above that level. So in this particular case, I'd be a little bit more conservative by waiting for it to get above that level and pausing, very similar to what we saw in Micron, because now it's validated that it's through that level. And you can actually see the next target in Micron if we do end up popping through here. It looks like it's around 95, okay? So working our way through this a little bit more. CRM, Salesforce, very similar. Bullish gap, pause. Looks like it's got roughly $12. I don't like this one as much as the other ones, but you have to notice the ones that have kind of reset. So if you notice, we went from some of the ideas, we started out with the market, went to the sector, and now we're looking at individual ideas. Stocks that had the biggest moves last week are a little bit beyond the best risk reward. So then we kind of worked our way down even further to say, okay, we like the sector. It's moving in the direction of the market, but which stocks make sense today? So we're trying to avoid the ones that took off already on Friday if they don't make sense. And we kind of dug a little bit deeper to find some ideas that I like heading into Monday. Okay, so we're going to keep working our way through that. All right. Okay, so let's not forget PLTR. And again, this is kind of fun. $20, big level. I don't know if there's any other way to say it. Bullish gap, held the earnings gap, teasing that $20 level. Now, when you see a stock continue to hit that level and get smacked down, again, I want a little bit more confirmation. It looked great. I finished the week with another energy candlestick. Impressive, right? Bullish gap after reporting. Energy candlestick. 5-day pause. Big, impressive candle. 20 is a big number, both technically and psychologically. So let's think about this now. It got up to 20. It failed. Earnings was good. Paused after earnings. Big, amazing candle on Friday. I like this idea heading into the day, but 20 is a big resistance level. So let's use Al as an example, or let's say David, right? So we all have a certain amount of money that we can allocate to ideas. Some ideas are amazing, and there's plenty of room to go. The light's shining in, everything looks perfect, and you can get in there with a little bit more position size, right? But in these situations where they look good, but the last time it got to that price, sellers came in and boom, shoved it right back down. I'm not going to get it. I'm not going to put a little more into it. I want to work my way into that. Now, something about PLTR, Palantir, if you didn't happen to read the earnings last time, the big knock on PLTR is that most of their money, most of their revenue is coming from government contracts. So you'd see them have a $250 million government contract signed and the stock wouldn't move. This time's a little bit different. They're starting, based on the last earnings report, they're starting to work their way into the consumer area, and that's a much wider, broader base, which should smooth out their revenue. So just think about it as if you owned a candy store, right? One big customer or everybody in the neighborhood. It's a little bit better for long-term growth than just having one customer. That one customer leaves, you're toast. But if you have all of those different tentacles in there, it's a lot easier to see it smoothed out. So I like Palantir, but I like it better over 20. So I'm looking for it to get above that level before I start to make a commitment. All right. And probably the one at the top of the list that I like this week is Zscaler. You can actually see a big list of stocks that are in the same industry group as Zscaler and the ones that I'm looking at heading into the week. This is now the third or fourth time we've gotten up to this price level that we're looking for this stock to punch through. So this is really where we start to formulate different kinds of ideas where they're not only sector specific, industry specific, and stock specific. They kind of make sense when a bunch of stocks are doing the same thing. So what we teach everybody to do is you want to have a bunch of stocks in the same industry group in a separate watch list. And this is kind of like an advanced lesson right now, because when all of those stocks in the same sector and then in the same industry group are doing the same thing in the time frame that you're trading, that means that those stocks have institutional concentration. So in other words, there's research analysts and deep pockets that are saying, wow, this whole industry looks good right now. Let's start allocating capital. And that's why stocks move up or down. And that's what we're looking at right now. So you want to have all of those stocks that I just showed you in that watch list. And if they are all doing the same thing, which in this case, if Zscaler breaks out and PANW breaks out and CRWD breaks out and Oracle breaks out, and they're all following through, there's concentration, which means that we should have our attention there as well. But we need to let that play out this week to see how we increase, because it's right at that big breakout level, which is right here. And we could actually zoom out a little bit more right here. So you got some minor resistance over here, but then the next level after that, we're looking up at 252 and change, which is a pretty big level. So this is where we lean on the trend profit maximizer to learn how to hang on to those ideas a little bit longer. So we covered a lot of stuff today, but I think probably some of the bigger stuff, and I'll actually post this link for you here. We actually broke down options as well. What I'm going to do is I'm going to put that in the link here in the description, in the chat here, so you can actually follow through, because John on the option side has a completely different point of view where he's looking at the breakout and the surge of the breakout. So it's kind of fun to see two different perspectives. But what I want to do first is obviously make sure that you remember this is where the concentration of buying pressure is right now, and that's going to have my main focus. If the market kind of rolls over, energy has been the weakest, and even kind of healthcare is kind of pulling up the bearish side of that market as well. So you want to have ideas heading in on both sides of the market. Even if you don't short sell, you might want to hedge against some of those long positions. It's kind of an advanced thing, and we can get into that in a different video, but something to keep in mind as well. All right. So anyway, I just want to remind everybody about this. I am just so jazzed up about this. I really hope you join me this week. It's 3 days of live training with me. All you have to do is register. That's it. Just register and show up. And I want to be clear, the videos will only be available through Sunday. So do your best to attend and study this kind of stuff. So you can get the link to this one in the description below the video. All you have to do is sign up. 100% free. I'm super excited to speak to everybody in a little bit more intimate format on Wednesday, Thursday, and Friday of this week. So that's the game plan for this week. You saw behind the scenes in the daily ticker. You saw some of the other stuff, the metrics that we have. If we did a good job today, do me a favor, give us a thumbs up, hit that subscribe button, and I hope to see you on the event with me this week too. Have a great day, everybody.